Let's go euro yen. Euro yen's always interesting. So euro yen, IPDE, identify, predict, decide, execute. From a short-term perspective, what have we done? Violated structure, yeah. And what type of pattern does it look like we're putting in? We have a big green candle, and then we've got this consolidation pattern. Very important to recognize. It is consolidating in the upper third of that green candle, which is going to be a bullish sign. Yep. A nice high and tight flag. So we got a violation of structure, which makes us think bullish. We have a high and tight flag, which makes us think bullish. Should we automatically just get bullish right now, or do we need to do something else? Yes. This is not nearly enough room on my chart, so zoomed in it is, to get a full perspective on the market, is it? I mean, I'm just looking at 2026, 4 months. There could be a big major structure level right at this level that I don't know about. No. Gregory says, look at the RSI. You can look at the RSI as well if you want, if you gain clues from the RSI or enter indicator that you want. Now for me, the RSI, what clues would you be looking for from the RSI just to have this conversation? Is it something to support you in a trade? Is it something to potentially keep you out of a trade? Is it both? What would you use the RSI or insert favorite indicator for? Confluence. What is confluence? What you got to give me more than that. How? I don't want you to tell me what the RSI is. I want you to tell me what effect it has on our analysis. Greg says momentum overbought, so expecting a retracement or pullback. He says I personally like that the RSI is overbought. It means we had strong momentum candle, and the inside bar is at the top of the momentum candle. Mohammed says divergence. And Mo says market exhausted, expect a pullback. Yeah. So the RSI is interesting because you can have two different traders look at the exact same indicator and interpret it two different ways, all depending honestly on your overall bias of the market. So we can all agree that the RSI is overbought, and it's extremely overbought because my overboughts are up at 80. Right? 100 out of 100 traders can agree with that. Now, what that means for your trading, and this is why I like to ask the question, could be different. As someone who is counter trend based, so someone who has a confirmation bias where they're like, hey, I'm looking for shorts. You may see this as confirmation of your potential shorts, where it's like, hey, we're overbought. What goes up must come down. That supports my theory of getting short. On the other hand, you may have a trader who has a bullish bias, and they're saying, hey, RSI went overbought. That means lots of momentum in the market. Lots of momentum, good for my bullish trade. And they're right as well. So I bring that up because I thought it would be an interesting discussion of how we interpret the markets. And it could be the RSI, it could be structure, it could be really anything in the market because there's always going to be a disagreement between the buyers and sellers, or at least most of the time there is. But we can look at the same thing and have two different views of it. For me, I like to create my bias not off the indicator. I like to create my bias based off the chart. So kind of going back, Greg says, I can see the overbought aspect. So what is MACD doing? What is the trend, up or down? So that gives us to a different point. Is the MACD going to tell us the trend, or is something else going to tell us the trend? And this is an open question to everyone. And again, I'm price action bias versus indicator bias. So again, it's, you know, I don't want you guys thinking my way is the highway here, but price action is much more important to me than indicator, because indicator is based off what price action does, right? The price action dictates the indicator, not the other way around. So we can look at this and we can see MACD. We got histogram over the zero line. We got MACD over the zero line. So the MACD would give you a bullish bias. Does that conflict with your RSI, or does that support your RSI? Because the same thing here, right? If in order to go overbought, we would need to be in a bullish trend, right? So in a way, we would expect the MACD to tell us that we're in a bullish trend in order to get overbought in the first place. So now how does that work? Does that support it? Because now we're looking bearish, but we're bullish. Does that not support it? Like, could we be overbought if the MACD is in a bearish trend? Right? Things that make you go, So the point is, whether you're going to be using indicators or using price, there needs to be a routine of how you do analysis, a routine of what you do in your analysis, and a consistent routine of what said thing means for your analysis. So me personally, in order to answer this question of, hey, we've got consolidation, we've got price action after a bullish momentum and now going sideways, the question I want to ask is, Akil, do I think price is more likely to go up or down? And for that, I just need a little bit more information. So we can bring the MACD on later if you want. I need a little bit more information. And again, I'm biased towards price action. So for me, I just want to see, where are we at bigger picture? And we may need to jump up to the weekly, right? But where are we at bigger picture? So bigger picture, scrolling up, where is our next level of structure? Let's go to the weekly. And are we above it? Okay, well, here, this black line, right? This is the level we just broke. So would you guys say that we are in the clear, or would you guys say that we are at a level of structure? At a level of structure. Now, going off the lesson I shared with you guys yesterday, right? If we are here at black line, and this second black line, the structure level, is our ceiling, do I want to jump when my head is close to the ceiling? Or do I want to buy when we're already at a level of structure? No. There's my bias. There is my bias, guys. You see? Right here, and again, I'm price action based. Beautiful bat pattern, by the way. Anyway, what I've just done with price action is I've created my bias. I don't want to buy. Now, I do want to take a peek at the daily just to kind of see what these wicks look like on a lower time frame. But I don't want to buy when we're right at structure. So now my confirmation is set for selling opportunities until we break that level of structure. And now whatever I'm looking at on the chart, indicator wise or whatnot, I'm looking for that to support my directional bias. So again, you can use different things, but the point is that you have a routine, a consistent routine for what you're going to use and how you're going to go about creating your directional bias. And again, that's the whole IPDE thing, right? The identify and prediction part is creating that directional bias. The decide and execute is following through on that directional bias. Such a beautiful pattern. All right. So let's go back down to our daily. Again, we see that we are at our previous level of structure. Now, if you're super aggressive and you're someone that aims for the very highs, there is room to go to the highs, right? And this is going to be on your kind of your comfort level, your aggressiveness in your prediction, where some people are like, hey, I always think we're going to hit the very high watermark. Some people are like, nah, once we're in the zone, I don't think we're going to go beyond that. So there is still a way to attack this bullishly if you want. But understand that structurally, we are at a previous level of structure. All right, Greg says, so the RSI view, look where it was overbought halfway up that impulse, price continued for ages. What's the message you're trying to convey there? Is it that price can be overbought for a long period of time? RSI overbought doesn't mean price will turn now. Yeah, 100%. Correct, yeah. Did someone say that? I'm sorry, I missed a lot of the conversation. But yeah, price being overbought, as you mentioned earlier, right? You can look at it two different ways. You could look at it as a what goes up must come down. Or you can look at overbought as being, hey, we went overbought because we have very high momentum. This is why I think it's a very dumb idea to sell every time price goes overbought or buy every time price goes oversold. Right? I don't think anyone, I hope no one here does that. But no, yeah, the RSI is a momentum indicator, right? The higher it goes, the more strength it means the market has. Now, you can get to a point where you say, hey, at some point, what goes up must come down. But in my opinion, instead of just using the RSI for that, what should you use for that? Yeah, you should use a price action clue, right? This is the predictive in your analysis, reactive in your execution type of thing, where it's like you can say, okay, price action went overbought. We're at a level of structure. Should I sell right now, guys? We got two things, right? We got structure, RSI extended. I should sell, right? Load up that order and sell? Or should I wait for something? And again, I'm not, they're as traders, I always got to say this, right? You can do whatever you want. If you're a very aggressive trader, you can sell. But in my opinion, you want to wait, right? Predictive in our analysis, reactive in our execution. You want to wait for price action to give you a clue that it's more likely to go down versus up. Looking at this right now, there's absolutely no clue that price action is likely to go down. We have a tight consolidation, a high and tight flag, which is a bullish pattern, as mentioned earlier. There's nothing that screams short. So you wait for that confirmation of that short. Then that's when you look to get involved. And you can even say the same thing for a long, right? So if we go down to a 4-hour time frame here, right? You see this high and tight flag. What would be an example of waiting for confirmation? Well, we've got this range. What if price puts in a lower low, lower close? Right? Then we have a violation of structure. We know what our rules say about violations of structure. And then boom, maybe that's the confirmation signal that you were looking for. Or maybe you even use the RSI. Oops, having trouble dragging it. Maybe you use the RSI in a different way. Where we all know the thing about well, maybe you don't. The RSI zones. Where you have, let's just put it at, we'll do 40 and 60 to make it even, but you have zones with 40 and 60. Where as long as price action is traveling above this 40, up into this level, we are in a bullish trend, right? So ever since we came out of here, we touched it here. This probably should be 33, but we'll just do it, 33 and 66. You could do either or. And again, sorry for getting RSI nerdy on you, but as long as price action is traveling in this zone, we're in a bullish trend, right? So we've been bullish since right here. Maybe your confirmation, if you don't want to use a price action confirmation, maybe your confirmation is also the indicator where it's like, hey, I need price action to break this 33 level and then maybe retrace, and then you look to catch on the next retracement once we've made that RSI rotation. Now that will probably take a little bit longer, but if you're looking for a long-term short, then, or some safety in it, then you've got that. Maybe you look for, someone mentioned the MACD. I'm not the best at using the MACD. It's not I've never really used it in my trading, so maybe you guys can lend me some ideas. But the way I would use the MACD if I were trading it is I would just simply look for, let's make this a darker blue. I would simply look for price action, or not price action, MACD action, I should say, to maybe cross back below the 0 line. Or if you're again, I'm not a trend line trader either, or not trend line, EMA trader either. You kind of sold on the MACD too, the MACD crossing the signal line. But maybe you're an EMA person and you say, hey, my confirmation is, what is this? The 20 white crossing over the 50, right? So you can get your confirmation from different places depending on what type of trader you are. Again, I'm a price action trader. So for me, it's personally price action, but you guys don't need to be like that. You can get it from different ways. The key is, unless you are a super aggressive trader, it's one thing to develop your bias, but it's another thing to actually wait for the market to give you that clue that tells you that your bias is more likely right than wrong. You're not always going to be right. Hopefully you're not always going to be wrong either, but you're more likely right than wrong. So, good conversation. And if you want to make this simple, here we go. Like all that trading talk for the last 10 minutes for nothing. If we break and close below, look to get short. If we break and close above, look to get long. There we go. Could have just said that.